Hello, hello, hello. Welcome to All Stock Trades. Mic check 1, 2, 3. Okay, guys, check this out. So in this video, we're going to go ahead and take a look at the bear case of SoFi, look at the increase in short volume from our stock terminal, look at the AI support resistance lines, and then go ahead and kind of tie everything together. Okay, so if you like this video, definitely hit that thumbs up button. So I always like to first off, I'm a bull. I'm a SoFi bull, right? I believe that they're doing a great job, but it's always good because we don't want to live in an echo chamber. It's always good to listen to the other side. So I went ahead and I listened to the bear case here. So I just, went ahead and took some notes of the bear case and overall kind of going through this bear case and me basically analyzing it. The whole examples they're using, they're saying, okay, SoFi is a sell because it's really competitive in the fintech space. Okay, we know that. Student loans, the debt growth is decreasing, indicating a non-growth product area for SoFi. Unsecured consumer loans, consumer deposits. These are the type of the bear cases they're raising up. But I want these bear. What I've realized with these bear cases is that they don't necessarily relate to the company. They're just, it's easier to be a bear than it is to be a bull, right? Because you have to have solid data for a bull, which is why crap like this gets disseminated. But I would say they're growing really great, and their revenue growth is superior. Most people are challenging this revenue growth, which I agree. If this revenue growth gets challenged, we can do a calculation just like how we did the price to sales and intrinsic value to see, hey, you know what is the bear case of SoFi? But what I'm seeing here is a bunch of, like one of the examples they used is SoFi plans to build trust and lifetime relationships with members is ambitious. Okay. I mean, yet the company, bank charter, and financial resources do not guarantee a competitive advantage. Okay, competitive edge. It's a bunch of blanketed statements that really don't tie in. Once you come at me with a fundamentals argument and show me some numbers from SoFi, then we can have a discussion. But a lot of these, bear case, articles and I listen to them because I really want to see if there's any substance to them. And as you can see, I'm not really going through it because it's a waste of time. All right, that's kind of my. But I'm just showing you. I put in the work and obviously I looked into it, but it's not conclusion. TLDR, nothing burger. Okay, interestingly though, if you look at our stock terminal here, we got a dip in short interest on December 27th, and then we started getting a rapid rise of total short sale volume. This is part of our stock terminal. We get by. You can look at our stock terminal commands at allstocktrades.com in the link down below. But overall, if you look at December 27, we can just kind of pull it up here. Maybe, I don't know, 6 months. December 27. So you can see here short volume. Oh, hello. Short. Okay, watch. I want you to look from December 21 to December 27. So December 21 was around right here to December 27. That's a 10% increase. So that increase right there, how like the stock price was going up really quickly. That right there was short. So that increase right there was shorts covering. So let me just kind of, so this little increase there, or maybe be specific, this little increase right there, that's shorts covering. And you can see it here. But then all of a sudden, the short volume started increasing rapidly. And by January 2nd, that was just a really huge spike in the total short sale and volume. So let's look at what happened January 2nd. So you can see you see that big spike caused the price to go ahead and go down. So you could see the shorting here, right? Overall, I think, if SoFi is able to capitalize on their growth rate and ultimately expand and be able to offer products, again, amazing management. Anthony is well loved and respected in the field. And they're about to become gap profitable. They're going to mention it hopefully up in the next quarterly earnings in January 29. I think it's going to be some shenanigans happening during that week. And SoFi investors are, at least the ones that know what, the ones that are like been in here for a long time, they're like buckled up and ready. We're just waiting, almost like the countdown to New Year's. I guess we get 2 New Years this year. We're going to see right now what's going to happen, but we believe it is going to spike up. We could do an earnings call analysis and look at all the spike ups to earnings, and we can see. We'll do it on the next video to see what could be the estimated increase based on the options. But overall, if we go ahead and look at first off, just look at general chart here today. SoFi is down 1.59%. On the 5 days, it's down 11.89%. On the month, it's down 25. 6 months down 24. Year to date down 23. And then 1 year up 36%. And obviously, Max, it's still down. But remember, it was in the $4 region, so it had a really magnificent run. So based off of this, and again, right now it's trading at 741, right? 742 to be exact, but 741 here, right? So what we're seeing here on the minute chart, and again, these are artificial intelligent resistance lines. Again, it's a long time ago, people used to write their own emails. Now they use AI to write their own emails, right? So just like with technical analysis, as part of our stock terminal, we like to use third-party vendors and to decrease the price that it normally would cost for retail investors. And I just think this is a wonderful, wonderful product. And overall, you can see here that the support line at $7.28, we're looking at that, and it has been respected on the minute chart. It has been respected. So potentially rebound, but we'll see. We'll test it multiple times. If it breaks, and that's where we're at right now, that 733. So we got 2 different support lines, 733 and 728. We're looking at those. If those break, SoFi investors are pretty much like, we wouldn't be surprised at $6.75. But guess what? If it goes down there, I'm very excited. In fact, selling some puts would be definitely great and advantageous there. So I think that, if this breaks, then we might get down to that level. And let's say, for example, we do break the 675. That means we've then broken the 686, which means that we could potentially, if the mid caps analysis and the small cap analysis that we did in the previous video, if you haven't checked it out, please do, because these are a continuation of videos. The analysis all come together. I should probably make a playlist so you can, kind of, because when I'm talking to you, I'm thinking that you've, just to make the video shorter, that you've already watched the videos that we had before. So we don't want to waste your time, right? It's better to get it in chunks than get it all at once. This is not a university lecture, right? This is just straight up, me explaining the graph here. So I don't want to be a lecturer. So as you can see here, once it breaks that 686, we're looking at that 638. If that 638 breaks, which I don't think so because it's pretty supportive, but once that breaks, we have the 493. But before we get to the 493, we have that 521. But I think the $6 region will get respected. We'll see. And then for folks that just don't get it, if the stock does a run up between $10 to $6, that's $4 increase, right? 4 divided by let's go ahead and say 4 divided by 6, that's a 66% increase, right? So 66.7 to be exact. But that's very advantageous. So that's why I'm making a lot of videos right now, because I would rather buy SoFi when it's going down. That you'll always see me make videos on the extreme when it was at $20 and I said no, it's too expensive, or around the $4 region. You see me making videos. I would rather buy a company when it's falling like a knife, and obviously looking at the support and resistance, rather than buying it when everyone's happy. I want to buy it when people are sad, because I'm sure there's probably some retail investors out there that don't really know a lot about SoFi, that they just got in because of the hype, and they got in because it ran up to that $10 region, and now they're just selling it off. And these the shorters here are taking advantage of that, and also I am as well, because I'm taking their shares. So what's your prediction for price per share on Jenny? So we could go ahead and do an EPS analysis. I don't really do that. The beautiful part about being who we are Al Stock Trades. We are an independent equity research firm that do fundamental and security analysis. And the biggest market we have right now is for retail investors. Okay. So my response to you, Eric, and this is going to be a good response here, is, by the way, Eric's question is, what's your prediction for price per share on January 29? So what I like to do is I like to leverage being a retail investor. Okay. And what does that mean when leveraging a retail investor? Unfortunately, retail investors, the only advantage they have is they don't have to have yearly results, right? You don't have to improve year over year on the street to get clients, right? That's actually an advantageous edge, because then you can look at a 3-year to 5-year time horizon. Okay. If you listen to the Compound, Daniel Ives Compound and Friends interview, he actually mentions this, and he talks about how retail investors were actually right on Tesla. Retail investors were actually right on Palantir before institutional investors. But unfortunately, what I see is a lot of retail investors, what they do is they try to get tricked into the short term. And again, that's what Wall Street wants you to do. They want you to trick you into the short term. My recommendation is I like to zoom out, and I like to, obviously this is more zoomed in on the price structure, but again, I'm trying to, see where this is going, because, you could play the options here as well, right? Obviously not buying. I don't buy options. I think, I'm not, that's just not what I do. I like to sell, like, covered calls, cash secured puts. I'm more conservative in that matter. It's very dangerous, I would say. But overall, what retail investors have is you don't have to stick to Wall Street's agenda. We know that this company in 5 years, in 10 years is going to be different than where it's at right now. Okay. We already know they're going to be gap profitable. So again, I know long-winded answer, Eric, but I just wanted to kind of give you my thought process. And I want to send this message loud and clear to retail investors. Use whatever you have as an advantage, right? In fact, let me send you a image. Well, let me just describe it. There's like 2 different types of people. There's people that have some wood in a toolbox, but they never open the toolbox, and they can never build a ladder to see the view. Then there's people that use the toolbox to build a ladder, and they ultimately end up seeing the beautiful view in the sunset. You want to use the tools you have. Institutional investors have a lot of data, which is why we're democratizing it, and I'm paying in the hundreds and tens of thousands of dollars to basically create this platform for retail investors. But ultimately, we have something over them, which is we are not constricted by the year-over-year results, because they're all in fighting power against each other, trying to secure the highest yield, because then clients would end up going to them. And we're talking, billions of dollars being lost. So ultimately, that's my take on the matter. Long-winded answer, but again, this is just trying to give you guys some wisdom and just experience. Use what you guys have, which is a long-term vision approach. If the destination is going to be from A to B, then whatever shenanigans Wall Street pulls, as in this graph with increased short volume, take advantage of it and pretty much be able to buy the dip. Because historically, if you look at the 50-day moving average, whenever a stock is above its 50-day moving average, it's not retail investors pushing it up. It's actually institutional investors. So take advantage in getting yourself ready for that push up once the stock ends up getting in a position where it touches these particular resistance levels here and is able to bounce back up, so we can capture the 66% gain and beyond, depending if you're a swing trader. I'm speaking to the swing traders out there, and or long-term investor, which I am a mixture of both. All right, ladies and gentlemen, if you like this video, definitely hit it up with a thumbs up, as it helps with the YouTube algorithm. And I did some research, and I found that 55% of you guys don't subscribe to our YouTube channel. Remember, subscribing is free, and it actually helps with the YouTube algorithm. So just hit that button, and you'll be able to see upcoming future videos that we make on SoFi. So definitely take advantage of that. And I really appreciate all of you guys for tuning in, and I'll see you on the next one.